Good morning and welcome to Dubber's Investor Webinar to discuss the company's FY23 financial results. Presenting today, we have CEO and Managing Director Steve McGovern and CFO Andrew Demery. We'll go through the presentation released today on the ASX. To ask a question, please submit them via the Q&A button at the bottom of the screen, and we'll do our best to get through as many of those as possible. I'll now hand it over to Steve.
Thanks ever so much, Ben, and welcome to the investor update. Thank you very much for joining us. What we're going to do today, obviously, is just take you through the financial year 23, and we also made a commitment that we would update investors on the progress of our AI initiative, which we call Moment. So we'll do that as well. So Andrew, if you'd like to start the presentation, please, that would be great. So FY23 was a year, as it says on the screen there, of improvement, particularly in the second half of the year, with accelerating revenue growth. So Andrew will take you through the backbones of those as well, and that will form into an outlook which goes into FY24 as well. So we've realigned the cost base. We've done that at a point where we've invested over the last 2 years into developing our AI initiative, which we think is a game changer. And again, we'll take you through that. It was always the vision of the company to deliver AI from telephone or communication service provider network. So we've accomplished that as well. And it's put us in a situation where we're able to give some guidance, some formal guidance around our expectations for the next financial year, both in terms of our revenues and also our cost management as well. So Andrew.
Thanks, Steve.
Yep, top lines, Andrew, please.
Yeah, so the key, these are the key financial numbers that from my perspective for the year. So revenue of 30 million, that's up 23% on last year, with a lot of that growth coming in the second half and a real acceleration there. We're exiting at a $36 million revenue run rate. So effectively, our churn is extremely low. So that 36 million forms the baseline of our expectations for FY24, and I'll talk a little bit more about those later. Record cash receipts, 36.1 million, sort of in line with the growth in revenue across the course of the year. We're now connected to over 205 communication service providers. So that was sort of 185 at the end of March. So we're continuing to expand the penetration and the size of the connections into the Dubber platform. And when we include the capital raise we've undertaken in July, we've got a really solid cash position on the balance sheet of 42.5 million at 30 June.
Thank you. So obviously, the numbers are there. We've broken them down by region, so probably give an explanation as to how we're operating at the moment. If we start with Europe, which is obviously a significant part of our revenues, we're connected to a number of major service providers in the UK and Europe. The Dubber brand actually resonates really strongly. We're an integral part of the communications industry ecosystem over there, much more so than you'd recognise here in Australia. And so the growth has come through a number of things. It's come through organic growth, if you like, in those tier one service providers. It's come through organic growth through the breadth of the original smaller service providers we put on with Dubber for call recording. And there's also symptoms of a significant shift of service providers to cloud. So one of the key elements that has been actually worked on right now is the migration of Vodafone's legacy call recording platform. So it's a significant commercial deal for us. But apart from the financials, the message is really clear as well, that the carriers themselves are setting themselves up for cloud and for also innovation on their network. So if somebody asks you why a Vodafone moving to the Dubber platform, it's to set themselves up for what they need, which is increased ARPU driven by products across their network that are easy to deliver. Now, this is the first of a number of migrations. We've actually got one undertaking with the national carrier of Denmark, New Day as well. That's actually in situ right now, and we expect to carry out more across the globe as well, but including Europe. So revenues have gone up in Europe. The final piece of the Vodafone migration actually started yesterday, which is one of the tier one banks. There are 26 tier one banks that we've migrated onto the DABA platform as part of that Vodafone migration. So that will give you some confidence around the veracity of everything we're doing from a compliance perspective, and also from a flexibility in terms of the technology perspective. We've seen growth post the financial year off those customers, where they've gone into our unified communications or unified recording service. So in other words, classic example, a couple of the banks were recording on mobile. They're now recording on either Cisco WebEx or Microsoft Teams, viewing the data in the same platform, which of course is the DABA platform. And so I think that's really reiterating our USP, that we are a single multi-tenant platform. We don't connect at where the customer's contact centers are. We connect at the source of the call, and that's inherent in our total business strategy. So that's a quick synopsis of the UK. Americas is up 38% from obviously a much lower base. We've seen significant impact from the team that we put on in the last 18 months in the US. What isn't in those words there is that we've actually extended it for the first time into Central and South America, predominantly for recording in the first instance. But the message is the same. The service providers are looking to move their infrastructure to cloud. It's been a long journey for them, one that we were well ahead of, probably too far ahead of, frankly, in terms of philosophy. But they're moving now. And also Cisco, our relationship, which is a unique relationship with Cisco, where we're embedded into their technology, is really moving very, very well for us. And we've sort of encompassed that into our guidance for FY24 as well as a minimum figure. In the rest of the world, that really is APAC. And so that's Australia and part of Asia. We're obviously a lot smaller in our home country than we are in other regions. We'd expect that to grow in the current year based on the initiatives that we're undertaking. So that's probably the area where you'll see the largest percentage increase in the next year. We are connected to a number of networks here, and we'll talk to you about the unified communications platform with Telstra, which is typical when we go through some of the use cases on moments. So that's the revenues by region, and that leads us neatly into Andrew, the finance report. Before we get there, we are talking and looking to provide investors with continuing updates on things like gross margin, around which are core to the business plan. We have invested into integrating a lot of communication service providers in the last couple of years. We've launched our new AI products, and we've completed significant upgrades into the actual DABA platform, particularly as we've integrated businesses like Speak and Noted as well. So these investments allow us to grow against a relatively fixed cost base for call recording. So when we look at gross margin, Andrew will probably take you through what's included in that. And we don't split out at the moment R&D, for example, in our direct costs away from the cost of providing the service. So Andrew, if you'd like to take over from that point, please.
Yeah, I think it's fair to say, the gross margin is good, but it will continue to improve as we go forward. We've done a lot of work this year in both in the development of these AI services and everything that's in all of the incremental variable costs of delivering the DABA platform fall into the direct cost bucket. So we use Amazon Web Services to host our platform, as well as Microsoft's equivalent and some others. So all of those costs go in there. We've certainly, as you develop and launch a product, you obviously incur costs for the development and testing and so on of those products, but you don't generate any revenue for them. Going forward, obviously, we'll start to generate revenue against those types of things. We've also done a lot of work, particularly over the last 9 months, around the efficiency and optimization of the platform. So the platform now elastically scales significantly better, which means we need less fixed overhead attached to the size of the provisioning we have on for a platform, for example, like AWS. So I think, as Steve said, we're targeting a margin of over 70% in FY24, and that's really based on keeping those direct costs around the sort of level that they are now, and obviously the revenue grows substantially off the back of that as we're more efficient in providing the services underlying that. I might just take us through the financial results. We've talked about many of the numbers already, but yeah, 23% like-for-like revenue growth in FY23. is the sort of the adjusted revenue growth. Our actual revenue growth, if you look at the 4E, is over 80%. We had a presentational change that we talked about at the half year. If you read the interim financial report, where the some of those variable platform fees that we talked about in FY22 that got reversed, that was presented as a bad debt in the FY22 accounts. We have new auditors this year, and they've advised that we should treat that as a reduction to the comparative revenue. So there's nothing new or change there. That's simply a presentational change that's been applied to the FY22 comparatives this year. That all of that reversal doesn't relate to FY22. So the most appropriate method to look at the revenue growth this year, in my view, is that 23% growth, which really represents the actual growth that we did on a like-for-like basis year on year. I think we've done 30 million of revenue, but again, the important point there is, if you look at where we ended up in June, we're at a $36 million revenue growth rate. Overall, we reduced the net loss for the company was down sort of 14%. Again, and we'll talk a little bit more about costs in a couple of slides. But the numbers for the full year aren't necessarily fully representative of where the business is now, because we did a significant restructure that sort of started at the back end of February this year. We've taken a lot of cost out of the business. That cost has come out over the last 4 months, and we're now sort of running at that a reduced cost run rate. But it's difficult to see that obviously within these numbers. But we'll give you a little more color as we go. Again, this is just a bit of a profile of what the revenue has looked like over the last couple of quarters. You'll have seen this in our last quarterly announcement. But yeah, you've really seen some acceleration of growth across the course of Q3 and Q4. So we're at that sort of $36 million dollar run rate, based on where we ended up in June. In terms of costs, as I said, costs were up, particularly around salaries across the course of the year, on the basis that we had higher average headcount across the course of the year. That chart on the right-hand side is just giving you an idea about what our average quarterly headcount looked like across the course of the year. So we grew across FY22, and then you can clearly see the impact of us completing the majority of the development work across the version 2 of the double platform, which is giving us access to some of these efficiencies and also the AI products. And as we completed that, we've reduced some of our variable technology headcount and also went through the restructure. So you can kind of see our exit FTE headcount rate is substantially below where we've been at any point over the last two years. So again, that gives us some confidence in terms of the cost forecast that we've been talking about for FY24, and that the salaries and related costs will reduce FY24 on FY23. Our share-based payments, that's non-cash, but that was down year on year substantially. That's really reflecting a couple of things. We've started, we're reducing the volume of share incentives that have been granted, and also not all of the share incentives that would have been granted, particularly to some of the KMPs. The achievement rate was circa 50%. This year, so there's a significant reversal and reduction in KMP remuneration that will come, effectively coming through in the year, which is partly what's driving in that share-based payment reduction year on year. I'll just touch on cash flow. So if you look at the 4E, we show that we've got $2.9 million of cash on the balance sheet. We've actually got substantially more than that. When you add all the pieces together, we've got $30 million that's classified within trade and other receivables, based on the initial maturity of that deposit. That's available to us, and we also did a capital raise in July, which will give us another 9.6 million net of costs. So we've had six of that has already come in, and there's another 3.5 of that subject to shareholder approval next week. So we're well capitalized with $42.5 million of pro forma cash on the balance sheet at the end of June. We'll talk about the forecast going forward, but the FY20 cash outflow is substantially less than that $42.5 million. And then again, in terms of the cash flow for the year, our receipts were up 21%. We had a record quarter in Q4 at 10.2 million. The operating cash outflow for a year as a whole was greater. Again, that's related to the profile of the costs, particularly the headcount that we talked about on the previous slide. Our Q4 costs, in terms of the net operating cash outflow, was 8.4 million, which you already have seen. That was reduced from 16 in Q3, and again over the course of FY24, we expect the run rate for operating cash outflows to reduce across the course of that year, as revenue grows and we maintain our discipline on costs. Steve, would you like to talk moments?
Thanks ever so much, Andrew. Thank you. So in the last update that we gave to investors, we obviously talked about the launch of our AI initiative Moments. Moments is a productized version of AI that's sold directly from the source of the data, which is the actual telephony or communication service provider network. So that's Dubber's USP, and where we fit in and where we play as an organization is, a lot of you will know us as a cloud call recording company, so we're definitely playing in that bucket. To record calls on a network, you're actually capturing the data. Now, this was always the vision of the company when we first started it. It would be fair to say that whether it be call recording in the cloud or whether it be AI, maybe our philosophy was a bit ahead of its time in terms of the market, and particularly our customers, which are service providers. They're well and truly there now, and the reason why they're there is because the Dubber platform, as it says, uplifts the capability in capturing content at scale across an entire network rather than just an enterprise end-to-end point. And what that means for the service provider is that whether it's call recording or whether it's where we're moving into AI, it's incremental revenue growth at a point where they need it, where the market, their own utility side of their business, is actually in decline, and it enables retention and to capture new market opportunities. So we're definitely playing, and have done for a while, in bucket one and bucket two, which is call recording and conversation capture. We've been able to surface AI in the past, but AI has been all around sentiment. It's been attached to keywords. It's a broad, I'll use the word unstructured to a degree, capability of capture, turning voice into data. We've productized things like sentiment, but what we've been building for the last 2 years is a world away from that. It's a quantum shift. And what it is, it's the ability to drive products out of the box that can be sold easily with a compelling commercial proposition that impacts a broad total addressable market. So what Moments does is it uses generative AI. It uplifts the ability for any business to get an insight on the key performance aspects of its business directly from its service provider and the conversations that it's already having inside its telephony service. From a service provider perspective, every single carrier we talk to globally is now charged with innovating on their network. Some of them have got really clear plans as to how they do that. Some of them are less clear, but they're all charged with innovating on the network from a retention perspective, but also to increase their average revenue per user. That's what the Dubber platform does. So in a world where AI now is becoming, second nature in terms of an idea for everyone, we have a unique position in it, in that we are, if you look at the AI providers of note globally around the world, they concentrate on the customer needs to give them their data. Invariably, that's contact center data. And then what they do is they process that data, learn from it, give back the customer an outcome packaged up with lots of service provision along the way. So you can see it's probably a laborious, worthwhile, but laborious and expensive process. That's not the field we compete in. We compete in the source of the data, which in our case, in conversation intelligence, is the actual calls across the network. And we deliver easy to consume packages, which we now have relevance because we've obviously worked with end users and our customers, which are the service providers, to deliver immediate impact that you can purchase as part of your telephony service and makes a dramatic impact on your business immediately. So we'd like to take you through some use cases, which have all launched since we've actually productized, if you like, Moments. We did a pre-launch just before the end of the financial year. And what we have done is we've enabled 2 or 3 service providers to go out and push the product for us. Now, I want to be clear on what enablement means. So any of the service providers who has the Dubber platform can actually sell AI Moments. Enablement for us is actually a level of engagement. And so internally at Dubber, we score, if you like, or we rate our service provider partners based on their level of engagement. And that can be everything from, is it fully productized? Is it wholesale or resell? Are the sales teams trained? Have they got the collateral? Is there a campaign? And that is a step-by-step process, particularly in the larger carriers, over a period of time. So to give an update on where Moments is at the moment, we have enabled, to a degree, one of the larger service providers in Australia. It's Telstra on their Tippet network. So in terms of enablement, they can sell it. In terms of the breadth, it's on one of their networks, which is their Unified Communications Network, Tippet, which is the preeminent business network in Australia. And in the US and the UK, we have other service providers that we've supported as well in the launch. So to focus on what's happening here in Australia, you can see the difference there in the graph regarding the skews, if you like, of where our business is coming from. So up until the end of the financial year, the vast quantity of all our revenues were all around cloud call recording. The company has been speaking for 4 or 5 years about what we called AI on every phone, which is the natural end game of producing AI from a service provider network. So in Q4, there was 31% of our customers that were sold through our local Australian partner here had Moments attached to it. It was a pre-sell that we gave them the ability to go and talk to specific customers about. In Q1, that rose to 42%, and the current pipeline of sales through the local Australian company here is 50 plus Moments as opposed to call recording, and we're seeing that just increase exponentially on the way through. So let me explain why. And it starts off with value, and it finishes off with obviously a much broader addressable market. So Andrew, if you can just flip over, please. So these are real life customers and use cases, which hopefully we can illustrate the breadth and the opportunity that Moments gives. So the leading construction industry supplier is one of Australia's largest companies. And what we're looking to do, or what they're looking to do, is transform customer service by deploying the complaints module. So you can see that at the bottom. And it's really understanding what their customers are saying to them. And we've enabled them to completely reevaluate the nature of their contacts with their customers in terms of the complaints are categorized. So they know what they're dealing with, and it lends itself to continuing business performance. So this is a construction industry supplier. You would all know who this is. It's a large organization, and the results basically enable them to become more efficient in their business, understand their customers more. It's all about service delivery at the end of the day. If you look at the categories in this complaints module for this customer, and it will make a significant impact to the way they operate their business and deal with their customers. And it's come straight from the network at an affordable price, which is good for Dubber, good for the service provider as well, and it's delivered immediately. The next one, please, Andrew. So we have a complaints module which we call abuse. We've thought of different names for it, but I think ultimately our research says that is actually the strongest name for this particular component. And this is a retailer in the clothing sector, I'll call it, where the staff historically have been subjected to random phone calls from the public, which you and I would regard as being abusive. And so the details are there for you to have a read of. This has changed completely the way that they're able to look after their employees. This abuse is, if I wanted to take it to an extension, the abuse module is part of a theme that we have, and themes will lead to things like ESG outcomes when you put 2 or 3 of our Moments modules together. And so whether it's transforming a single retail outlet or retail company, or whether it's building an ESG model which includes well-beings of employees, etc., that's really, if you like, the building blocks of what we're trying to do in Moments. Next one, please, Andrew. So a very well-known automotive company in Australia has actually taken 2 of our modules at the moment. And so initially focusing on complaints. So they're a franchise organization with multiple outlets, and they're very keen to maintain brand recognition in the market. In a franchise model, probably the franchisees have got more of a focus on their own business rather than the actual brand. So it's very important for this organization to understand the level of complaints going across their entire network. At the same time, utilize Dubber to work on sales performance as well. So identify whether an opportunity exists, it's missed, whether it's capitalized on. So again, there's a couple of the Moments modules that are within this organization, initially for complaints, but now on sales productivity or sales performance, as we call it. And again, as we take you down the journey of Moments, you'll start to see themes come across where we bundle up Moments that deliver, extraordinary value across multiple different insights. Next one, please, Andrew. This is a really interesting one, so I think you probably will relate to this. So a council, so a local council, we have several local councils as a result of this in Australia, can get 100 different calls, and those calls are radically different, from lost dogs to concrete, pavements being upturned to rates notices. They're invariably complaints. So the initial brief was to deploy our complaints module to understand the level of complaints, and then obviously it fell very, very quickly into call categorization. And understanding call categorization is really important for driving efficiencies in the councils, where obviously they're operating within limited commercial means to solve some of their issues. Now, this is on a unified communications network, which obviously we talked about, which is Telstra Tippet. And the commonality around all of these is that there are multiple locations that are served directly from the network where the telephony already exists. We're not having to deal with bringing the data from the customer to provide the moment. The moment is live. So it's not retrospective data that's curated. When a phone call exists, what happens in that phone call determines the outcome and the insight for the business or the council. And so that really is Dubber's position in the AI market, to be at the core of the source of the call. It's a unique position for us. The platform is built for it. And whether it's call recording or flowing through to the AI outcomes, the ability to actually deploy at scale, capture the data at scale, and provide out-of-the-box insights with dashboards in a way that's consumable for the end user is really the future of our organization in the AI space. It's a unique position we've got. Our capability is fantastic, but that's where we play. And it's a niche, if you like, but it's an enormous niche because it comes back to the basics, which is we turn telephony into usable data. We turn network communications into usable data. And that's an update on Moments, both in terms of the use cases and how it's being deployed. What we expect is to get more service providers active or engaged in the way that we regard them as being engaged, which is being involved in helping them run campaigns, productize the Moments, get the training done into their sales teams, which enables success as well. And that's the real focus of our sales teams as well. Andrew?
Thanks, Steve. Just to reiterate the FY24 outlook for the business, there's no change to what we published in June and reiterated in July at the quarterly cash flow announcement for the full year. So just to sort of re-summarize that, $45 million of revenue in FY24, which would be 50% up on the reported revenue for FY23. exit run rate of over $50 million we'd expect on that basis at the end of next June. And we're looking at sort of $65 million of sort of cash costs, excluding share-based payments, foreign exchange gains and losses, impairments, and so on, with the equivalent number being 88 million for FY23. In terms of what we expect to do for this year. So no change to those expectations, but just to give we've talked about this previously, but just in terms of providing a little bit of color about how we have confidence to get to that 45 million. Obviously, we've done 30 this year. We're at a run rate of 36, which you can see in the middle of that chart. We've got circa $3 million of committed revenues, i.e. revenues that we know are going to come in. Steve's talked about a couple of the customers that are already in flight, where we are in the middle of migrations, for example, where we've got good line of sight to what those revenues look like at post-completion of those migrations. Our foundation partner, primarily Cisco, have really started ramping up their deployment of WebEx to their end users. They've sold over 10 million WebEx seats out there to their customers. Each one of those seats includes a DoubleGo license for basic recording. We get incremental revenue for each tier of end users that they activate. So we've got good line of sight over what the expectation is over the coming 12 months about the additional DoubleGo licenses we'll get, and also the upsell that we will get through to premium Dubber products on top of that, based on our sort of historic penetration rate. And then we're left with sort of $5 million, which is what we've done, between FY22 and FY23, primarily, coming in the second half as sort of the expected organic revenue growth for this year. We're well underway with as sort of Steve talked to, with a strong pipeline in terms of delivering that, and we'll obviously provide some updates and as we go throughout the year in terms of how we're tracking against that. Steve.
Right, thank you, Andrew. Obviously, we're really happy to take some questions. The next touch point, I think, with the company is, as you see on the screen, we are looking to host an investor open day. We have a lot to talk about. We've got systemic improvements right throughout the company. The financial controls, the systems behind it allow us to put guidance into the market, and obviously Andrew can take you through those elements in person. We have a great team of people working with us. So obviously myself, James, Andrew, Neil Wilson, the chairman of the face of the company, but we're looking to get the team involved with shareholder presentations and discussing shareholders. We have a lot to talk about. We've got a lot of technology to show you as well, and we think it will be a very interactive day at HQ in Dubber. So that's October the 4th. We'll be looking to get customers, both service providers and their end users, to talk about why they've chosen Dubber, whether it's migrating their recording users or whether it's deploying Dubber AI, and what the future of AI looks like and for them as an organization. And then you'll be able to see very clearly where we fit in as well. So we welcome shareholders to that event. We'll send an invitation out in the next couple of weeks with some more detail around it, and that would be the next touch point because it comes before the quarterly report. So that's where we're at as an organization. It's been a year where we've made huge strides in terms of our technology capability. We're, if you like, transitioning from being purely a call recording company into an AI company at a point where the market is ready for it and our customers need it. To do that, we had to start 2 years ago. So we're very fortunate that we've met the timing there. We have invested heavily into it. We're proud of what we've achieved. We're happy to show you what we've achieved, and we can show you results and outcomes as well. And at the same time, we've looked at the cost management side of the business, and Andrew has, together with the rest of the team, made sure that we're right sized to actually service our customers and also deliver cash flow positivity as quickly as we can without losing sight of the big picture of where the company wants to go.